5, 4, 3, 2, 1. Okay, then I'll just hit it on this side too.
Okay, there it is. Bye.
Bye, Dudu.
I do.
Stephen Nathan is our guest co-host on a Tuesday. Stephen, good as always to be talking with you, and plenty going on. President Jacob Zuma apparently going to jail for 15 months for contempt of court. I mean, that's just the smallest of the issues that he has been accused of, but I guess it's a start.
Yes, without a doubt. It reminds one a little bit of how they got Al Capone. They couldn't get him for the bootlegging and the violent crimes. I think they got him on tax evasion. But what really matters is if you can at least bring culprits to book somehow. And I think that the vast majority of South Africans would be really happy to see Jacob Zuma imprisoned for some length of time, and maybe that also facilitates further investigations and hopefully convictions of many of the allegations that he has been accused of.
Stephen, you'd appreciate this. At the time of Nkandla, I did a little bit of work on what Nkandla actually cost South Africa. So I think the figure was around 250 million, but then I realized that the government was probably going to have to borrow to pay the 250 million. So it would borrow that money through bonds, issuing bonds, 20-year bonds into the marketplace. And by the time you got to the true cost, it came to something like R1 billion. This man has been expensive for South Africa.
Without a doubt. I mean, there's so many, it's kind of, where do you look to focus on the destruction that that was caused under the Zuma presidency? We look at GDP growth, where beforehand, I think many of us forget we were actually running budget surpluses in South Africa. Now, obviously, it's not just the president and the government of the day. There are economic factors at play, but under Trevor Manuel, under his leadership of finance, we're actually running budget surpluses, and our debt was very low. So we were actually seen as a very responsible and attractive emerging market investment destination. Then you fast forward over an almost 10-year period, and you look at the devastation from an economic growth perspective, from an increase in unemployment perspective, from state capture, from load shedding, as you say. And then you can look at Nkandla, some of the those sort of like outrageous numbers. So it's very the big picture is really, really disturbing. And maybe on a more lighthearted note, I remember speaking to a friend of mine about Nkandla, about the outrageous cost, and he said it's not so much the money that really irritated me. It's just that surely they could have done a better job with all that money. Surely they could have actually improved it. So one has to also see the lighter side of it. But the sheer economic impact, and we are paying for it, because it's much easier to destroy than it is to build. So it's easy to kind of get yourself in debt. It's easy to tear down. It's easy to milk institutions, but it's much, much, much harder and takes much longer to get them back to their former glory.
On the other side, the Republic of Consequences seems to at least have some consequences now.
Without a doubt. I mean, I think that's a really important message. We have to start to send strong messages of behavior that is acceptable and behavior that is unacceptable. And unfortunately, during the Zuma presidency years, there was really no consequences and no repercussions, and even no threats that if you were involved in state capture or incompetence or corruption, that there was going to be any threat. So it fell on deaf ears, and I think that was very demotivating for all South Africans. And obviously, from an international perspective, when you see that going on and you see the government turning a blind eye to that, then that also doesn't instill confidence. So definitely what we're seeing now with the health minister, with the contempt of court with Zuma, and even spilling over into the private sector, institutions taking these transgressions a lot more seriously and holding people to account. Because I think, if you are in a lawless, no consequence society, then it's much easier for anyone to kind of turn a blind eye, or to maybe operate in gray areas, or do things that you wouldn't otherwise do if you operated in a society where you know that there were consequences, and you know that those around you are also operating on a higher standard. So it's definitely a positive sign.
It's a good segue that into EOH. Today, we hear that they're going after the former directors, Asher Bobot, who at one point in time strode the Johannesburg business scene like a colossus. His company was probably one of the highest rated of all stocks on the JSE, but there was always a smell around it, and always concern that maybe this was not sustainable. And of course, now we know the reason why. But again, there's a consequence happening this time from Stephen van Coller.
Yes, I mean, Stephen, definitely was thrown in the deep end, and even I think from his perspective, he went in knowing there were problems. But I think once he got inside, the severity of the problems that he uncovered, and I think to his credit, he followed through on that. So I think that it would have been easy to sort of maybe gloss over things, maybe investigate to a certain level. But Stephen, it seems as if he is, really taking this to its final conclusion, to ensure that he unearths on behalf of EOH and all their stakeholders exactly what is going on, and does a very thorough and proper job, which they seem to be doing. Unfortunately, it's a really difficult one, because firstly, it costs a lot of money to do these investigations. So you're paying lots of expensive legal fees and fees to unearth it. Then secondly, it takes a lot of management time and executives' time to actually focus on these sort of things, because you've got to be, you don't want to make any mistakes. So you've got to be extra careful. You go into a lot of detail, and that, there's an opportunity cost, because there's only so much time, energy, and resources you have in a day. Do we run the business? Do we think about strategy? And how much time do we devote to bringing those to account? That have allegedly transgressed against the company. So there's that. And then I think thirdly, there's the reputation issue, is that, it's right and it's good to go after these people, but it does stick to EOH. It kind of keeps on reminding people about the challenges that EOH has as a company. And I think for clients, for staff as well, that is a challenge to go through. So it's definitely not an easy path to follow. There's definitely consequences and some downside, but I think it's the right thing to do from a governance perspective, and hopefully bring in those to account. But as I say, I think it's a bit of a balancing act when you're running a business, because you've got lots of stakeholders, and obviously one of the main priorities for EOH is to try and recover some of that shareholder value. So to try and get the business stabilized, profitable, and growing, so that they can add value to shareholders, they can add value to government as well by paying taxes, because when companies are profitable, they pay a lot more in taxes, and hopefully also create employment. And it's a bit of a sad thing, because EOH, I remember under Asher Bobot, they were one of the very first companies to aggressively go into creating learnerships and job opportunities for people. And they created several hundred jobs with a across their business. They gave opportunities for people without previous business experience. They gave them the opportunity of coming into business. So it's sad in that way that a company that did good on that area, overall has kind of slipped up in other ways.
Yeah, I guess everything has got two sides, the two sides of Janus. But what makes me happy, and I think should for all South Africans, is that this is actually happening. In my own business career, I had two instances where there was outright theft from high-profile individuals, and the board of directors dissuaded us from going after these people publicly, because it was just because of the reasons that you articulated earlier. And I also recall when I had a very short spell in banking where there was a full-on crook, and the bank eventually decided not to pursue it to its ultimate objective, because of the reputational risk. And that person, even today, some people think that that person is above board. So maybe the wheel has turned. Maybe if you get more of an EOH, more of a Ramaphosa attack on corruption, you will get no more of the sweeping under the carpet, which has got to be good for society in the long term.
I think you're exactly right. I mean, the easier default option is to say, no, the cost and the reputational damage, it's really, is it worth it? And if everyone has that attitude, then what you're going to do is you're going to be condoning and perpetuating this, and there are going to be no consequences. So I think I agree with you completely. Is that if society as a whole lifts the bar and says that this is, this behavior is unacceptable, then that hopefully sets a new standard, and we'll all benefit. I mean, societies that are transparent, that have accountability, that uphold the law and enforce the law are definitely much more prosperous than those that don't. So hopefully we kind of crossing the line from the former to being an unaccountable country with enormous problems to actually hopefully bringing people to account. So I agree that what Stephen and EOH have done and others is a very positive step in the right direction.
Let's talk a little about the whole story that's going on with Naspers. I know you've been following this very carefully over the period, and we've seen now that NinetyOne has come back with gone, in other words, against its founder, who's the key, Hendrik Du Toit, who's the senior non-executive director on the Naspers board. And they've also said that this is a bad deal. Now, you've worked inside these organizations. It must have taken some guts to have come out against Naspers in this basis, particularly given where their founder sits.
Yes, I think that NinetyOne must be complimented for the independence of the investment team, who are there to look after client assets, as distinct from the company's interests, and hopefully looking after clients and the company's interests are aligned. But we've seen many instances where institutions put their own interest ahead of their clients, even if it is to the long-term detriment of the institution. So I think NinetyOne very positive to see that, and to allow different opinions and different viewpoints. So the investment team would be looking at this from an investment mandate and from a shareholder perspective. Is this in the best interest of the shareholders? Obviously, the board, when you're sitting in as a board member, then you have more stakeholders. So it's not as simple as saying, well, is this going to unlock the most value for shareholders over the next 3, 6, 12, or 24 months? As a board, you do have kind of other stakeholders to consider. And also, I think it's difficult as a board member, and this is not a justification, but I think it's quite difficult to go against a very strong management team and probably other board members. So I think it's a very different position. Not that I'm saying that's right. I think that as a board member, you should stick up for exactly what you believe in. But it's just not that easy when you're sitting around the board table. And I think that's also one of the challenges that boards have, is because often people that are popular are appointed to the board. And if you're gonna cause problems and disruptions, and you're not going to toe the party line, then regrettably you are often not going to be chosen or kept on. And unfortunately, that's what you need. You need people who have a different perspective, hopefully a perspective that adds value. But when you get a board of everyone who agrees, then there's a saying: if everyone is thinking the same way, then no one is really thinking.
Stephen, what's your reading of the whole Naspers deal and conversion into Prosus? My sense as a shareholder is that I'm happy to do the conversion from Naspers into Prosus. It's a smaller discount on Prosus than it is on Naspers, although the whole thing I'm really not that excited about being an investor, and I'm talking now from the BizNews portfolio, in Naspers anymore, because they don't seem to be able to close that discount. And the danger being, you can't really sell it because they might come to their senses tomorrow, unbundle Tencent, and then you look like you've lost a huge potential gain.
Yeah, and I think we've spoken about it, and many people, I think everyone's saying the same thing, and it's pretty obvious. If you look at the value of Naspers, just rough numbers, the share trades at about 3,000. Am I right? 3,000 rand. It's 2,991. It's roughly 3,000 rand.
Yeah.
And it seems as if its net asset value is more than double that. And there's a bit of tax as well, but it seems as if the net asset value is after tax is almost double that. So it's trading at like a 50% discount to its net asset value. And obviously that's an enormous value trap, and we know that its biggest single asset is listed. So it's quite a hard number. It's a number that you have confidence in. Now, obviously, as a shareholder, you say, well, there's enormous value here, so let me go and invest in this, because hopefully, if management and the board put shareholder interest first, they should unlock this at some point. But unfortunately, management, board, and the controlling shareholders, which is the important point, have not chosen to do this path. They've chosen to look at financial engineering as a way of unlocking a discount, and it's quite. It's very disappointing in my opinion, because you're taking the same assets and you're reshuffling them, and you're putting cross shareholdings, and you're putting legal entities. So you're introducing enormous complexity. You're not adding any value to the underlying assets. In fact, you're probably detracting because of the complexity of the cross shareholdings, of the costs that are involved, because there's legal advisors in many jurisdictions, and lawyers and investment bankers. So you're spending a lot of money trying to create an outcome that you're not actually going to create, because the market's not that silly. And I think we've seen that as well. We've seen that with the Prosus listing. I think it was September 2019. It hasn't actually added much value relative to what's happened. I just looked. It's quite interesting, Alec, at Tencent. And Tencent when Prosus was listed was 350 Hong Kong dollars. It's now 590 Hong Kong dollars. So it's over that period, it's up about 70% in rands, and Naspers and Prosus up about 20% in rands. So you can see that the underlying asset is doing much, much better than Naspers and Prosus, which means the discount is just getting wider and wider all the time, and that's why I think people are unhappy. And I think what would be really interesting here is to try and understand the people who control the votes, because most people own N shares, which are very low voting, so they can't influence it. But it's really interesting as to those that actually do have the votes, their thinking, because the people who don't have the votes clearly have a different view, and it'd be interesting to hear, why they're taking such a different view from the fund managers and from the market in general, as we can see with this ever-growing discount.
Stephen, stay with us because Delphine's going to come in now, and it'll be very interesting for you to also have a little bit of an input into it. Hi, Delphine.
Hello. Hi, Stephen.
Hi, Delphine.
Great. I'll play a little sting so I know where we are, and then we can go into the conversation. Okay. Well, there's some surprise news today when NinetyOne, one of the big asset managers, decided to go public against the deal that has been causing so much controversy, where Naspers is offering to change or to swap shareholding in Naspers for Prosus. Delphine Govender from Perpetua joins us now. Delphine, we spoke about this on the day that you and 35 other asset managers issued a public statement saying you thought it was a bad deal. And at the time, I recall you saying that NinetyOne and a few of the other asset managers hadn't joined your group of 36 because they like to do their own thing. Well, they've done, to the surprise of some people, they've actually come down on your side.
I'm not surprised. And the fact that the larger firms, didn't join the engagement didn't necessarily mean they didn't agree with content. It was just the path that they were on, and that process, and we respected also the way Wheels to institutions is different. But one of at the time I made the observation, we had several of them at some point in engagement. It had been quite I mentioned less formalized collaboration and what should be much better formalized collaboration. I think you would have seen last week or the week before saying why they felt that the trans which they published on their website, probably with their interactions. So institutions were involved, but have obviously got their own route in terms of how to communicate levels of opposition. And I think the hard part was, 14 managers to agree on what you're asking for. So you halt it entirely? Are you asking for the swap? Even if we had no say in the transaction being halted, price, to be honest, then would you change the swap ratio to be more in favor of Naspers process, or what would you management incentives? And I think that was the tricky part. Commonality was collective opposition to the proposed transaction.
Stephen Nathan is our guest co-host on a Tuesday night. Stephen, were you surprised at all that NinetyOne came out with the line that it has, given that its founder is the lead independent director on the Naspers Prosus board?
Well, I think that Naspers is too big to ignore. So I think that, as all fund managers have to have some kind of a view on Naspers, given its sheer dominance on the JSE. So I think it would be sort of remiss, negligent, and sort of expected that as a fund manager you're going to have a view, and particularly on this transaction as well, because it is an important transaction for Naspers, and hence it's an important transaction for all South African investors, and also it's sort of it's entrenching a path. The path has really been from Naspers simply owning Tencent and other assets to Naspers owning Tencent via an offshore structure in Amsterdam Prosus, and now you're putting in another structure and you're putting cross shareholdings. So it's a very it's much more difficult to unwind these complex transactions. So I think all fund managers have some kind of a duty to have a view on Naspers and on the transaction. I don't think anyone's surprised, as Delphine has said. I mean, it seems as if the vast majority of fund managers agree that this is not the best way to unlock value for shareholders. The market has been telling us that this is not the best way to unlock value for shareholders. So it's not a surprise. I guess what would be a surprise, or not a surprise, what would be interesting is to see how the directors believe that this is a better way to unlock value than most of the fund managers and the market believe. But that's clearly not something to answer in one line.
After the results, I spoke to Bob van Dijk, and he was completely committed to the fact that he's going to continue with the transaction, no matter what the asset managers had said. And he said, well, we have also brought out a couple of statements, and we will talk to you. But there was no give from what I could understand. Has there been give subsequent to that?
I think, Alec, just from my perspective, Bob and Basil, the CFO, something like 18 to over a year. Transaction, I think they used the number of north of 10 that they had been working on, and then they finally said, I'm sure if we were in their shoes, role reversal, it would be incredibly hard. Track after having invested all of this time, advisory fees, having own boards of non-execs, then to now say actually recurring to one of my questions in a follow-up engagement with them is one of the scenarios why are they surprised? Because it's a lot of surprise by the shareholder reaction. So predicted that they would not by the sheer extent of the unified And for some reason, the lot simpler than it appears to post it. But it's also point. Well, there are two sticking points. The first is that they all have a singular reason for this, which is reduce Naspers' weight. And the rationale behind it is that the weight of Naspers to rise on the JSE because it's kind of mirror that in their portfolios. So you have this kind of philosophical heads on day one. So fund managers don't buy as the reason. And then the second, we have these identical sets of direct. And here you have a transaction which only the shareholders, of which, as we know, Naspers is the dominant one, which I think Steve was mentioning as I came on. And you have the Naspers, directors, but they're so depending, it's incredibly shareholder to believe that that same board, full respect in their professional sense, that when King says, putting the one soul in and then take soul of the company in. But so even if there was a scenario that they were convinced that maybe there is a better transaction, more equitable, once they're not protecting the Prosus shareholder interests. Difficult that must be to not just be independent in that sense.
Okay, so now for small shareholders, and we've got Naspers in the BizNews portfolio. There are two things that are bothering me, and the one, I've got a very deep discount, a bigger discount on Naspers than on Prosus, so it makes all the sense in the world for a small shareholder to do the conversion. So put that one side. But a bigger worry that I have now is that the Chinese government is going after its internet companies. They've just taken $80 billion off the value of Alipay. They're now attacking Tencent and Baidu as well. And that cannot be good for Naspers stroke Prosus into the longer term. So when you look at those two as a shareholder of this group, it's almost like while we're fighting over the swap ratios, the actual value of the company is being attacked by the Chinese Communist Party. What's your thought on that one?
Should I jump in? And Steve can...
Please, Delphine.
So, yeah. So the first point that you're highlighting is a risk that's pretty for many years. It became more high 5 or so years, particularly as over the whole VIE structure, which is the Tencent stake is held through the more known to investors. Shareholders, actually in Naspers for a while, and one of ironically the discount to relative to its NAV was not really giving you enough. It wasn't accounting you take on when you invest in Naspers. Underlying asset that Tencent is, there are risks. You don't, assets as the Naspers shareholder because structure whose legality has never been tested in and their mind at any point in time. And so when the 20% level, then you thought, well, it's a normal, 25, 30, perhaps it's all these risks that you take. But then as we know, so in short, I guess what I'm saying, these are not unknown risks. And they also that the discount will never close completely, or is and that one needs to absorb that the point though is that 55 is just and definitely 25 or 20 is the number it will close to. Yeah. So it is very what you're getting when you're around or 10 or 20 or into it's and by that I mean is that which is dubious. There's signs I've highlighted. If you're signing up for, the VIE and on the negative side of the coin, you're getting access to this incredibly fast growing. Is no other way possible to get access to it. It's really two sides of a coin, and every invest. I guess the challenge has been it's also been the biggest market, so it's been impossible to ignore, as Steve said.
Your thoughts, Stephen?
Well, I think that investing in China carries its unique risks, let's say, compared to the US or other developed markets. And it's always been a concern is when you're going into emerging markets, when you're going into less developed markets, there always are these sort of additional risks. It could be that the accounting practices may not be as rigorous as developed markets. It could be governance structures, it could be regulation, interference, the potential for nationalization. So, and as Delphine says, that's nothing new. But I think, what has happened over the last several years and maybe a decade or two is that, China commercially, although it's the Communist Party, they sort of have a communist political system, but a capitalist business system. And the business environment has thrived to the benefit of China and the rest of the world. So, that is a big positive. And I think today, it's a lot less risky than investing in China than, say, 20 or 30 years ago, but it's not without risk. So I think that, the geopolitical issues at that sort of a level, at a government level, at a political interference level, is e-commerce level, are Chinese companies used for government purposes getting into other developed markets? There are those geopolitical risks that I think have risen in the last couple of years, and they don't look like they are going to go away, and then that can spill very easily over into the business. You've seen with Huawei, if their products are banned in the US, it's going to have an enormous impact on the business and hence on shareholders. And then independently of that, we're just seeing the general regulation around technology companies increasing all around the world. It used to be that the US was very relaxed with antitrust and any other issues, and Europe was actually far more aggressive, and in fact, I think probably all the big tech companies have been fined hundreds of millions, if not billions of dollars for antitrust and privacy breaches, etc. And obviously what we're seeing in China is an increase in that regulation as well. So it's not in and of itself, it's not sort of out of line with a regulatory and political environment. And there's a lot of, what's interesting is that there's a lot of potential regulatory risk. If you're sitting as an Amazon and a Google and a Facebook, there's enormous regulatory risk in terms of what may happen. It doesn't seem as though the stock market pays that much attention to it because all those companies are doing very well despite that political risk. Where I think in China we have seen, obviously, as you mentioned, with pulling the Ant Financial listing, so there have been some issues. But I don't think it's in and of itself. It's something unique just to China.
Yeah, excepting in the United States, they've got courts, and today the Federal Court chucked out the antitrust attack on Facebook from 46 states, whereas in China, if central government decides they're going to smack you, they smack you. But anyway, it's you guys have painted a really good picture here of the risks. And what happens next, Delphine, with the interaction with the board of directors at Naspers? Are you hoping then that if this does continue, goes to a vote, that the vote will be against it? Is that even conceivable that it could happen?
It's because of Naspers shareholding with their 70-odd% holding share structure. As far as the votes come, it will go ahead. I think what would send, and perhaps this could be where the board are concerned, is that they would opposition vote or because remember, it's just the Prosus shareholders that vote transaction at the upcoming EGM. I'm sure they would want many to not vote the Naspers holder. And, I'm not sure how they would take that, and to work out how many of those shareholders will be voting. I'm aware, where there's some of the voting agencies globally, ISS being one that's also recommending to their clients that they don't proposed transaction. So that would perhaps, that's creating quite a lot of pressure in the system. It excuse me, it doesn't vote down. Sorry, it doesn't vote down the transaction though. Sorry.
No problem. It's we've got the COVID time now, so
so it doesn't. No, I mean. It really doesn't change the transaction because it appears just a simple majority. But I guess it just sends a very strong message that the boards would not want to be accepting. But ultimately, if they're single-minded about pushing this through, of the weight of shareholder opposition, I would think that at some point, they might want to revisit components of it. We're already seeing them try to move elements of what the management incentives are doing and try to kind of come with some sort of, ground. It's hard to imagine that they would be to walk away from the transaction, notwithstanding the amount of how much energy has been spent on it already. We would be incredibly impressed if they did.
Bob van Dijk did also say that he considers all 85,000 Naspers shareholders. In other words, thanks for your comments, but actually there are many other shareholders, asset managers. So that sent a bit of a signal, certainly in the conversation I had with him. But your hope is that they will take this on board.
They would see that there clearly is a between the way they're positioning their actions. If the ultimate goal is just one thing, which we have the ultimate goal, I think this is the challenge because ourselves is interested in, why we invest in a stock. In the investment case was very premised on the discount and the question is, does management care about our investment to them, or is what matters to them for the next 30, 40 years that, looks that might eventually come to pass, finding if it ever happens. So they might not be as inclined to wanting to unlock that discount. Part then is trying to understand exactly why they believe for some of the actions they take. If there are indeed the sheer majority of shareholders to unlock. The perplexing part is why these are the transactions. We are completely aware of the restrictions from the South African Reserve Bank, from the regulatory limits in which, in terms of, the domicile of Naspers, they're trying to avoid or minimize the CGT, which in itself has an irony because actually it's discount is, ironically, if they were on unbundling, it really is probably about 8% of what the value is that they could unlock. We hope that we're aligned, but will we be? We just seem to be very hard on the steps to get there.
Fabulous. Thank you very much, Delphine. Thanks, Stephen. It was
I wanted to offer you some water, Delphine. Have you got some water there?
Yeah.
I wanted to pass you some water.
When you think you don't think it's gonna happen.
Yeah.
Sorry, guys.
You know what? I just, Delphine, I had a thought I was going to actually ask you. If Naspers